Hi, welcome. My name's Karen Newton. I'm a strategic investor. I help people build wealth, income, and lifestyle. And today I'm going to show you how you can be in the perfect place at the perfect time to get the best results with whatever is happening in the market. So let's talk strategic investing because that is how people make money and make lots of it. You may have watched videos and you've thought, I need to get into this now, or yeah, I wish I'd known that at the time. Well, that's where strategic investing comes in, and that's what I'm here to teach you about today. Now, just my usual disclaimer here, everybody makes money differently and everybody absorbs information in a different way. Okay, so up to you how much you make or don't make. I want to explain the difference between a trader and an investor, because when you understand the difference, most people think, hey, I need to go into trading. That's how I'm going to make money really quickly. The reality is it's investors who make most of the money. So let's have a quick look at the difference between traders and investors and understand the different mindsets that we actually use. So when we look at a trader follows trends. There has to be a trend. It's either an upward trend or a downward trend. You make money in both markets. It doesn't always have to go up. You can make money in a downward market. Okay, but that's where traders work. They follow trends. They identify where the trends are. They get in very quickly. Now, investors go contrary to the trend. So when everybody else is buying, investors are selling. That's how they make their money. They're selling when everybody else is buying. And when everybody else is selling, they are buying. So investors go contrary to the market. Now, traders work on short-term trades. Okay, trades can be from a minute or 30 seconds. They could be up to 4, 6 months or something. Right? But it's very fast. You have to time the market to get in and make sure that you are there at the right time. What investors do is they acquire assets long term. Some of my assets I've held for like 20, 30 years or more. They are still doing what they were bought to do. So there's no point in getting rid of them. As a trader, you operate as an individual. You have to make quick decisions. Excuse me. So if you were to turn around to me and say, oh, Karen, what do you think about doing this? You missed the opportunity because it's fast. It's like this when you're trading. Investors operate as individuals, but they also build teams around them. So for instance, for me, I invest in businesses, in property, in shares, in commodities. You know, I need teams of people around me. If I'm buying property, I need a lawyer that can do the conveyancing. I have a broker who finds the deals for me. I have a money man who puts the finance together for me. I have a team that go in and renovate the property. You know, there's all these people who are part of my team. And so as an investor, you build teams. That's how you make your money, is you have the people come in, you have the experts there, and they do everything for you. You are working on the next deal. Now, as a trader, you operate from two mindsets, one of fear and one of greed. Now, there is nothing wrong with either of those mindsets. It's simply that you need to understand which one you operate from, because you will use slightly different strategies. And if you are someone who operates from fear and using a strategy based more around greed, then you're setting yourself up to fail. Top traders work with psychologists so they understand how they react in certain situations, how they get the best from the way that they are chemically mind sets. Okay, investors operate from patience. Right. We have to be very, very patient because we have no control over what happens in the market. We let that market come to us. And when the timing is right in the market, then we go in and we make our money. So patience is a huge part of what we do. Now, as a trader and as someone who is learning to trade, 90% of people will lose 90% of their money in the first 90 days. Now, as an investor, we're learning how to make money going into the markets and how to make money coming out of the markets. As a trader, if you are an exceptional trader, that means you've spent a few years learning the skills, becoming very, very efficient at what you do. You can expect 6 to 10 of your trades to be good trades. And you hope like hell that the money you make from those 6 trades covers the money lost in the other 4 trades. Okay, this used to be 7 out of 10. This average is coming down because more people are coming into the market, trying to trade, are losing money. So the average these days is 6 out of 10. Now, as an investor, you are creating the assets for the traders to make money. For example, if you take Amazon, if Jeff Bezos had not created Amazon, traders wouldn't be able to buy their shares, trade on their shares, look at what the company profits are doing. Bezos created that company so the traders can make their money on it. That applies to every business that's out there. An investor created the asset so that traders can make money. So trading is not investing. On my platform, when you hear me talking about trading, I will tell you it's trading. When you hear me talking about investing, you know I am talking investing. Okay, 2 different mindsets. So once we get that right, you'll understand the whole concept of where we make our money as investors. Good traders will make money very quickly. They could go in and they could make money within hours or within days or weeks. They can make money very, very quickly. Investors, though, are generally 100 times wealthier than a trader. So from my point of view, I do a little bit of trading, I do a bit of investing. I have a combination of both. I am predominantly an investor, so you will hear me talking mainly from an investment mindset. Now, there are 5 investment categories, right? You can take, if you're like me, you see all these things out there in the marketplace and you think, oh, I've got to get into that, I've got to get into that, I've got to do that, I've got to do something else. But the reality is that if you put those into a funnel, you can break it down into just 5 categories. And those 5 categories for investing are business. Now, you might not think a business is investing, but when you're starting a business, you are investing in your future because you are setting up a business to generate profit that will allow you to invest. The share markets or cryptocurrency, whichever markets you're more interested in, they fit into that one digital asset category. Then we have property, lots of different ways of making money in property, but it comes down one property category. And then we have commodities. Okay, and again, I have gold, silver, other commodities that I work with, precious metals. And then we have a 5th category, which is intellectual property. That is what you create. All right, so anything that you do to make money will fall into one of those categories. When you understand the category that you are falling into, then you start to build the other ones out, because you want this balance, because things go up and things go down, which I'm going to show you now as we talk about strategic investing. So we need to be generating income through all 5 categories. We need these 5 assets because, as I said, one goes up, one goes down. That's where the strategy comes in. So investment cycles. Now I want to explain investment cycles because these are the fundamental part of strategic investing. And we have this peak where something goes up in price and then it will come down. And then it goes through a bit of a lull and then it starts to go back up again. Okay, so this is an investment cycle. And our job is, one, we want to identify what the market is doing. Where do we think the cycle is for each market? This will help us to identify the best time to get in to buy an asset. It will also help us identify the best time to get out of an asset. Right, and as we go through now and look at these, you'll understand what I mean by this. So most people's experience with investing is they get a hot tip. You know, Joe Bloggs down at the pub knows the person who knows a person, and this is absolutely going to fly. You have to get into this now. Well, this is in this part of the investment cycle. Okay. What happens is they're buying in here when there's very little time to be making money. As the price starts to drop, they are in denial. And they're in denial because Joe Bloggs has told them it's a hot tip, it's definitely going to make money. And they are determined that they're going to make money this time. They've lost it in the past. But what happens is this denial means that when they see the prices dropping even more, they are panic selling. So they're getting out, they've lost a lot of money. Come around to where the investment is now starting to grow, and they're scared. And they're scared because they have lost money in the past. They're not going to do that again. No, I tried that. Hey, look, that does not work. Okay. And so they're scared of getting into that market until they get this tip. Hey, this has gone up. It was down here. It's now flying up here. You're going to make money this time. And they are just repeating this cycle over and over again. So where do we come in as investors? Well, the first thing is, when other people are in denial about a price going down, we are there studying, we're learning, we are watching what is happening, and we are looking for the opportunities. So we're not looking at all the stuff that's, hey, in the newspapers, you've got to buy this, this is going up. That's all noise that goes on in the background. What we are doing is we are seeing, hey, prices are starting to come down. What are the opportunities for us? Now, because we've been studying these opportunities, when people get into panic selling, investors are the people who are there buying those products off them. We've done our research. We know that this is in a downward cycle. We know we can buy the property cheaper than it's going to be worth, and we get in there and we buy. Now we move into this growth cycle, because this is where we're starting to make our money. We are waiting for it to go up, get through that area where the fear is for most investors, for most people. We get through that. We are making our money now. This is where our wealth is starting to grow. And then when everybody else is coming in on the hot tip, we are selling. We make our money. We've bought low and we are selling high. And so understanding where we are with an investment cycle helps us to know when is the best time for us to get into this market. So what is strategic investing? Well, first, it's identifying what is happening in the markets. Now, we have tools that we use that we can see what's going on. A lot of it is subjective. We look at data, we know the data is showing us that something's going down, but whether we get into the bottom of that drop or not, that comes down to us personally to identify. History helps us understand what happened in the markets previously and how those markets actually reacted, because history repeats. You know, if you're young and you are in your early 20s or early 30s, right, you haven't been around long enough to know what happened in the 1900s. Right? And I can tell you now, so far this year, this decade, I should say, or century, we have had a pandemic, we've had a war, we've had high inflation, we're all heading into recessions, depressions. Okay, we've got all of these that are happening at the moment. If we go back to the 1900s, we had war, pandemic, boom time, depression, 1930s, another war, another boom time. We can look at history and we can see that what happened in the past is happening now. We don't learn, we repeat. And it's a very sad fact, we repeat. So when you understand history and when you know the way that the markets reacted previously, hey, you've got a bit of an idea about what is likely to happen. Then we can identify what are the risk levels within each market. So if the property market is going down, what are the risks in the property market? What's going to force those prices to go down even more? What's going to trigger repossessions? What's the likelihood of this happening? We can analyze all of that. And then we can say, where are the opportunities? How can we now get in on this so that we can ride that growth area, and when everybody else wants to buy, we sell and make our money. So we are going to be learning and we're identifying what is the best strategy for the economic climate today. So strategic investing, to repeat this, it's about identifying the opportunities, buying when the prices are low, holding as it goes through a growth period, and selling when the price is right. So what you'll discover with me and what I'm actually teaching people is strategic investing, right? Understanding the markets. What is the best strategy to maximize the markets? Build cash-rich online businesses. Grow through mergers and acquisitions. Grow a share investment portfolio. Capital growth and income. International property portfolios. Fantastic opportunities here. Using mortgage and options. Remember I said we use the strategy that's best for the economic climate. If properties are going down, we don't want mortgages because there's clauses in there that will trigger a repossession on a property. We use options. We want to protect our investments, and we do that using hedging through bullion. So when you understand strategic investing, you can actually see the future. You can see the opportunities that are out there, and that ensures that you are in the right place at the right time. Now, if you want to learn more about strategic investing, the links are below. I run a membership site. It's called KNI Mastermind. And as I said, the links below. Take a look. Let's see if we can get your investing strategies higher so you are making money.